Well, the great debate continues. Is this simply a bear market rally or has a bottom been put in? You know, there was a series of tweets that caught my attention from Milton W. Berg, CFA, that said, if this were a bear market rally, then the S&P 500 gain of 17% off the decline of 23% would be the greatest bear rally ever. The NASDAQ gain of 22.5% off the decline of 33% would be the greatest bear rally ever. This would be the first time the 5-week advanced decline exceeded 1.9 to 1. This would be the first time the S&P 500 generated two 20 to 1 upside days in 5 days. Volume days. This would be the S&P 500 generated 3 to 1 upside volume days in 20 days. It would be the first time the S&P 600 generated a 40 to 1 advanced decline. It would be the first time the S&P 500 generated a 50 to 1 advanced decline. Now, the reason the distinction is important, folks, is that there really is a lot of money to be made or lost at this very moment if you get in or if you stay out. Joining me now, two of the very best in studio, Main Street Asset Management CFO Aaron Gibbs, along with Bell Point Chief Strategist David Nelson. Aaron, is it a bear market bounce or maybe we put it in a bottom?
You know, besides the 10 facts that you just pointed, because there's not much to add. You kind of covered it all, Josh. But besides the 10 points that this is the most extreme, that, like, if this is still a bear market rally.
It'll be an asterisk next to it.
Yeah, I think, you know, the fact that it's 2 times longer than what we saw in March is another positive saying that this is for real. This is coming in. But I think what really speaks to me is it's really about interest rates. I mean, this rally started 3 days after the 10-year yield peaked. And so as long as that yield sort of remains in that downtrend, it stays below 3.5%, I think we're going to see a continuation. I think the reason why people are worried is because we're seeing such a big decline in earnings estimates.
Right.
We're seeing some big cuts.
But ironically, though, when the rally first started, David, that was what a lot of people were saying. We need to see adjustments made to earnings estimates, PE ratios, and those sort of things. The S&P 500, S&P 600 rather, small cap, was at the beginning of the week, last week, was like 12 times for PE. I mean, at the very least, we were oversold.
It just doesn't matter right now. We have a get-out-of-jail-free card right now. I think it's fair to say the bottoms are in for the year. There's a fair amount of anxiety right now, performance anxiety. A lot of funds, a lot of strategies are starting to underperform. You know, investors get mad at their advisors and portfolio managers when they lose money. But you missed the rally completely, and the market ends up on the year, and you're down. That's how you get fired.
Right. But your clients were telling you, hey, we want to hold off. Are any of them changing their tune at all?
Not yet. We're doing our best to convince that, you know.
How old are your clients? Like 80 and up? Like
very conservative. We have a lot of conservative people. We have a lot of conservative.
Yeah.
But, you know, we'll get there. And I think, you know, now that we're really 8 weeks into this rally, sort of 2 months of letting people know, reassure.
Right.
That's we're getting to more of the reassurance.
We got to talk about the downside, right? Because it's obviously going to be tested. What do you think the next big test is then?
I think it's
a lot of people are looking at Jackson Hole and what the Fed says there.
So Jackson Hole. And obviously the next CPI report, because we just had 1 month of slightly lower inflation.
Right.
So that first week of September when the CPI comes out, I think that's going to be super critical.
That was a hell of a sigh of relief right there, even though it's still a 40-year high inflation, right, David? What do you think the next big test?
I think it's going to be October. I think, you know, we've added a lot of exposure right now. We got to get out of jail free card. We're not going to get that again the next quarter. Analysts have made it a little easier because they're lowering those estimates, but we're going to need to see something a little better to justify the exposure we added.
You know, there was a lot of criticism, though, that the street was too high in terms of not only earnings estimates, but operating margins, profit margins. Is that still too high? You still worried about it?
I think it's still here. And you even see it in the big numbers at Walmart and others. You saw those inventories really climbed for both Walmart and Home Depot.
Right.
Yet the stocks are a lot higher. And the Walmart was almost hysterical because they ended up beating the money that people were estimating 2 weeks ago when they warned. It's almost comical how the spin
It's a game.
takes
It's a
over.
game. I kind of wish we only announce earnings twice a year like Europe. I really do. I think it's become too much of a game, and companies lose or gain way too much. Before I let you go, you had AZP last time.
Yep.
It rocked. It's rocking. What do you like now?
Marriott Vacations. The consumer is one of the big component that's been driving this rally. So I'd say pick your winners within the consumer discretionary, and Marriott Vacations is one I like.
All right. What do you like?
I don't have any money, so I got to sell something to buy something. But my last buy was Disney, and I bought it after the quarter. I thought it was an extraordinary quarter. This is going to be one of the few streaming companies that'll be profitable, and that's going to be the new metric to look for.
So you still want a certain level of, well, I was going to say safety, but it hasn't necessarily been the safest stock in the world in the last year.
No, it hasn't. And, I've got other names in there. Value's actually kind of taken a back seat. And, in the last 6 weeks off this rally, it's been mostly a growth move. And I've got to upgrade the portfolio.
What I like is that you're both cautious, but you're still, doing things, right? Because you don't, like you said, you don't want to miss this completely. So I appreciate it. Keep rocking. All right, Aaron, David, thank you both very much.